Good morning, y'all. Happy Friday. Dave here with you, the mortgage professor. I'm gonna go ahead and do a pretty deep dive market update here. Just kind of show us the trends and the direction we think these mortgage rates are heading in, and kind of starting the or ending the week rather with a bang. Got some pretty huge news regarding inflation, and let's go ahead and jump right into it. Alrighty, y'all. We're gonna get right into the big news here today for us. So the PCE report, the essentially the Fed's main inflation metric, came in much better than initially expected this morning. So we were expecting to come in at 2.2%. We came in at 2.1%, which is year over year, that is. So that's going to be a little bit less than what we were initially projecting, and then that's actually down from 2.3% year over year. So wonderful news on the on the inflationary front. So what does this mean? So in my opinion, and in the opinion of a lot of people that are a lot smarter than me, the reason why mortgage rates have been kind of hanging out, and just not moving as quickly as we're expecting them to, is mainly going to be the fears of tariffs and the inflation caused by said tariffs. And I mean, this is kind of living proof that that's behind us. So this is now the third positive inflation report that we've seen in a row, which is awesome. And then in addition to that, I think we've had four positive inflation reports year over year. And we actually have to go all the way back to February 2021 to find a lower inflation number. It was 1.8% back then, so it hasn't beat by a pretty good margin, but this is great news. I mean, it looks like we're trending right back in that direction. Additionally, GDP revisions came in. So I mean, we're looking at it right here. So GDP came in initially at negative 0.3% for the first quarter. This got revised to negative 0.2%, which is excellent news. It's still negative, but any positive news when it comes to GDP is going to be great news for us economically moving forward. Unemployment claims did rise to an additional 14,000. Now, that said, I mean, that's still pretty low. I mean, if we're looking here, I mean, our unemployment rate is still pretty close to all-time lows. Next week on the third, Tuesday the third, we're actually looking at getting we have the JOLTS report, so it's going to be a more detailed job openings report. I'll fill you guys in on that if there's anything that's alarming that we have to keep an eye on. So let's take a look here at what mortgage rates are doing. So this is the 10-year Treasury note. Today is down 11 ticks, which is good. Over the week, though, we're actually looking solid. We're down quite a bit. This is where we got the revision yesterday morning with from GDP. So pretty good green ticks there. We want to see this come down. We really want to see this come down. And this is when we got the positive inflation report. So everything is ticking down. Started the week off kind of rough. This green or this red candle rather. This is when we got that Moody's downgrade for our credit rating as a nation. So we've recovered quite nicely, and we're actually better off than we were to open the week. And month over month. No, we're recovering. It was a little bit better to end the month of April, but I mean we're making moves in the right direction. So let's take a look at what the 10-year Treasury is doing, or pardon me, the mortgage-backed security market's doing. Today is flat as a pancake, which is a little bit surprising, honestly. So we have a lot of green here. We have inflation coming in at essentially year to date lows and close to a 4-year low. This is a little bit puzzling, and the reason why we're getting this report a little bit later is I was consulting some executives at mortgage companies and some market insiders and experts, and we're all kind of perplexed as to why that PCE did not really have a big impact on mortgage rates today. That said, we are all anticipating things to get better. I think they're holding off for that JOLTS report. But still, weekly, we're ending, and this is the opposite of the 10-year treasury. So we want to see this go up, actually. We want to see this bond go as high as it possibly can. And we're up 9 ticks, which again is solid. And we're ending the week much better than we started it. Excellent news. We're trending back into the sixes for rates. Um, Over the last month, though, we're gaining any ground that we've lost, which is also still good news. And let's see. Yeah, so I mean, rates today pretty flat. To be clear, these are not my rates. I get that question all the time. I refer people to this website a lot. So if you're in the market for a home, this Mortgage News Daily website, or if if you work in real estate or new construction, pretty good website to use in your back pocket. You don't have to spend, the hundreds of dollars a year on MBS Live like I do. Leave that to me. But it's a pretty good indicator of what the market's doing. So we've seen some minimal gains today. Again, any gain is a gain. It's good news. I think if you're asking me what my expert opinion is, I'm floating all my loans out that are closing within a 45-day period. I mean, I really think that we're probably going to be due for some pretty sizable market movers and rate cuts in the coming week or two. I really believe that. I think the Fed is going to hold pretty steady, and we can kind of see that here. So in June, for this meeting coming up in 18 days, we're expecting they're going to do nothing. I mean, we're we're at 95% chance of rates staying steady. July's the same thing. In September, however, there's a 90% chance of a rate cut. That all being said, I'm anticipating a lot of these lenders to go ahead and start pricing in these rate cuts now. So starting next week, expect to start seeing rates come down. So if you have a borrower that's on the fence and they're going to use this, you know, as an excuse to stay put, or if you're in the market to buy a house and you're looking at these charts, you're like, the Fed's not going to cut rates till September. I'm just going to wait. Mortgage companies, these billion-dollar corporations are all smarter than that. So here in the next week or so, and the reason why I'm seeing rate cuts are coming on the mortgage rate side, expect to see mortgage companies price this in starting pretty much right now. And I mean, we see this all the time. I mean, if there's a projected Federal Reserve rate cut, you're going to start seeing lenders kind of cheat and price that into their rates right away. So don't hold off. I mean, it's if you start to see things move in your favor, if you can work the right deal out, I would highly suggest beating the crowds and going ahead and grabbing it. So that's going to conclude the market update. Again, expect to see rate cuts. Expect to see positive market movement in our favor here to start next week and to end today. As always, if you have any questions and you want to do a more detailed dive, give me a holler. I'd love to have the conversation with you. Again, my personal projection is I'm floating all my clients at the moment. I'm expecting some pretty good rate cuts to come over the next day or so, or actually over the next couple of days, going into middle of next week. If we get that unemployment report in our favor again on Tuesday, I think greener pastures are definitely ahead. Um, Shameless plug. My name is Zaid. Again, I'm the president and co-owner here at Stonegard Lending. We are a mortgage brokerage. We have access to a couple hundred different lenders. As a broker, I just need one application and I'll shop your loan amongst over 200 lenders. So every lender is going to kind of cater to a different type of borrower, different products, and we, because of volume and because these guys know that we're going to shop them on the wholesale market, unfortunately for retail guys and unfortunately for you as a borrower, we're going to get substantially better interest rates as a brokerage than you would be able to get. So my job, to put it simply, is to put you or your clients in the best possible financial position. So, if you have any questions, my contact information will be below or attached in the email. So, give me a holler. I'd love to help you out. Thank you. Have a good one.